All right, Bismillah. Yeah, we're gonna get into the how-to of trading for the most part. I do trade ICT, inner circle trader concepts. Predominantly, that's where I first started out. Felt like I was missing out, so I kind of ventured into like other things to get a more of a professional feel, and a more, I wouldn't say a more professional approach, but honestly, yeah, I feel like I leveled up with the types of learning, types of teachings I've been exposed to, type of mentors and um, coaches I've had along the way. Um, so ICT, S&B Capital, Michael Martin, Adam Grimes, I would say, or the I have to include Alexander Elder as well. His material. George in Jail is I forget the name of the book, but it's not down here, so I can't. I think it's the How to of Futures or something like that. How to Trade Futures or something. Um, anyway, going to deliberately make these videos shorter so you can digest more material quicker. I know people's attention spans are not the best. Don't worry, I'm one of them as well. So anyway, just want to kind of, again, just want to bring up the Six Thinking Hats by Eddie DeBono. This is like vital when I feel like something's missing in my approach to the market. I think these six hats benefit me a lot. The white hat is concerning raw data, like the facts, what you know. Black hat is the caution, what can go wrong. Red hat is the emotions, how you feel about it. You can bounce around between the hats, go back and forth, seesaw type deal, or you can go in a more systematic way, and you can kind of like summon. I'm going to use the word summon because I like that word, but you can kind of like summon a hat for any given situation. The yellow hat is more optimistic. What are the positive expectancies? This yellow hat, you can use it for like the expected value of your trade, like, right? Like, I'm risking XYZ, right? My entry is here, my exit's there, that's my R. I'm willing to risk one R to make 3 R's, right? Or 4 R's or 5 R's. That's optimistic. Let's say, if price hits a level of support or resistance, this is where kind of like the green hat can get involved, which is the creative side. What are some alternatives? What are some like a blueprint of where and how I want price to behave, or what happens if price does this and I'm gonna do that, right? And the blue hat is pretty much a summarization of everything that you have. It's also like a hat you can wear or include to like reset. Right, let's go back to the blue hat. Let's summarize what we have. Okay, I think that we need some more black hat thinking type deal. All right, good deal. So, and again, the 7 fundamentals of one good trade by Mike Bellafiore. There's a book by the same name, One Good Trade. Proper preparation is key, right? What is your approach to the market? What is the approach to how you, even before you even sit down to the market, like sit down to try to take on a trade? Are you properly prepared for what you are expecting from the market, right? Forget who said it, but everyone gets what they want from the market, right? So if you're losing, then it's kind of like based on the effort that you put in, right? Because you are literally attracting what you want, right? Maybe that's in the market. That's to say you're in the market to tell people, hey, I'm an investor or I'm a trader. You know what I mean? You just literally have to identify what it is that you want from the market and make the necessary steps, do the necessary math to get where you want to be. And sometimes the math don't add up, right? So it's kind of like make yourself accountable before you are brought to account. So here we are at forexfactory.com. I didn't take anything off, but this is where you would go. Hit the filter. I'm going to turn off everything. Hit US. I'm going to turn off the gray and the regular standard, moderate, high impact. And click apply. This was today, 8:30. 8:30 moderate news, and also 9:45 for flash manufacturing PMI. Honestly, I don't get into the numbers, but if that's your thing and it gives you edge, then go ahead, have at it. Looks like there's high impact news every day this week. 8:30 Wednesday, got the Feds talking. So I just usually screenshot that, and I just throw it into PowerPoint here, and then I keep it pushing right from there. Anyway, just want to get into some price action. This is today. I did the news was here. Did this little run up, run down, pop back up. And in general, I use the 4-hour chart as my high time frame chart. And you can do the 4-hour, 1 hour, 15 minutes, or you can do any variety, whatever you're comfortable with. And you can see here a little bit more clearer, right? For the most part. So this delineates the new week. This is the new week. So it's Friday. Let's turn that off. Turn off the days of the week because it's in the way. All right. Turn off the news. All right. So I'm gonna do this. Let's erase everything. I don't want to erase everything. Anyway, this is the fair value gap from last week. It's still holding strong from 2 weeks ago. You can use the 4-hour this imbalance here, fair value gap, or you can use the auto block. See what that looks like. Right. You see it here reacting 60, 51.50. The low here is 60, 51.50. So it is something still in play, still some degree of sensitivity. You can even use this one here. It's up to you. Anyway, I like what I do, right? Fair value gap is strong. So hits here. We expecting some type of reaction because it's 1, 2, 3. I know some people say support is tested 3 times or whatever. Then the 4th time is going to be like so you have 1, 2, 3, 4, 5, 6, 7, whatever, right? Definitely it's a key level. So here I highlighted these 2 up close candles, the opening of this one and the close of this one. You can definitely use the low of this candle and the high of this candle. That's doable. That's okay. I didn't. So anyway, I use that as a bullish breaker. You don't have to use that. You can use whatever you see. I'm not going to get too heavy because I want to keep the video short. I want to keep the video short going forward. So anyway, I highlighted that. I eyeballed this consequent encroachment, the midpoint of this level. I paused because I'm not sure if he calls it mean reversion or a consequent encroachment, but it's the midway point of this breaker, right? You can also highlight here as a bearish fair value gap that's been violated. So it's now an inverted fair value gap. You can do that as well. So I usually do it like this: 4 hour inverted fair value gap. It was bearish, so I put the negative, and I put the 4 hour here. So that shows. You're gonna see what it looks like here, and we have the swing low running this liquidity here. So you see, you can do internal range, target, and external range. Right, this is internal range liquidity here. This imbalance is fair value gap, and this is external range based on this price range here. So that's the target, right? Let me just make that like a 2. I put buy side liquidity, BSL, for buy side liquidity. You can call it whatever you want. Doesn't really matter as long as you are consistent. You can just call it the pivot high or swing high, and just look at that as a target. This is like relative equal highs all right here. You can say that too. So yeah, we can drop down to the 1 hour time frame, and you get to see like. All right, so this right here, this bearish candle, 12 o'clock candle on Friday, bearish candle. The moment that this bullish candle broke above it, this becomes an order block. All right, this took out liquidity, ran stops here. Breaker market, well, can't say breaker market structure, but a change in the state of deliveries here. You can draw that out if you like. That's 60.51.25. The opening price on this candle is, the close of this candle is 60.51.25. The close of it. You can do this here. 60.51.25. So it's just, I'm just highlighting it to show the relevance of the level and how to identify that level. So again here, so you have a break the moment that this was an entry, right? You can enter. Ideally, you wanted to hold above the midpoint of this. Ideally, you wanted to hold above the midpoint of the 4 hour fair value gap. You have price breaking. Now we have a breaker market structure. Break above this, pull back into this order block. And in general, it's both of these candles. Sometimes you may see like. Let me highlight this one candle here, right? And then sometimes you'll see that you use the wicks and not the body. But you can see here 50, 60, 56, 50, and the low of this candle is 50, 60, 56, 50, and the close of this candle is 60, 56, 50, showing again the relevance of utilizing these order blocks or these down close candles as support. I did take this trade last night on the 5 minute or 15 minute. I got out early because the Asia session is not necessarily the session that I wanted to trade in. I do have some regrets because I did leave an opportunity on the table, right? An opportunity to maximize my trading. But you can see the 4 hour, this 4 hour level, it is being respected. The breaker is also being respected. The fair value gap, I should change the color, right? I usually use like a grayish color because it's an inverted fair value gap. It's violated bearish fair value gap. And that's what happened here. Right now, honestly, it's too much on the chart. I'm probably going to take it off. But anyway, so we see here the price ran the previous day's low. You can say, retested, whatever you want to say. Pull back down, order block. This is your entry. This is your turtle soup entry. Here's your low risk entry. High probability, low risk entry. Here's another entry, add-on or support. Again, consolidated here as expected on the Asia session. So it consolidated here and then took off. Consolidated right above this order block. Took off, pulled back into this order, to this fair value gap. You can say it. I'm gonna take this off because it's not, there's other things you can use. But anyway, so you have this fair value gap on this time frame, price traded down into it, consequent encroachment, pushed back up, pushed up. You have a bearish imbalance here, price pull back down into the 4-hour bullish breaker, held above the midpoint, pushed back up, took out this previous day's high or buy side liquidity. Again, we had news at 9 around this area here. We had news and that candle there, 1 hour candle. So it pulled back, then it opened here, pulled all the way down here into here, and then pushed back up to take out the 4-hour external range liquidity. And you can see here that price tested the level, pushed back up, took out all these relative equal highs, and you can see it traded into this bearish. It's more like this balanced price range, really. So I'm gonna highlight it. So it's an inverted bearish, inverted bullish, inverted fair value gap. Or you can use this one, the bearish fair value gap. But like I mentioned, I prefer inverted fair value gaps, as they do denote a change in the state of delivery. That's 60, 95, 60, 90, 25. Let's see. This high here is 60, 90, 50 and 60, 90, 50. So still pretty good as a resistance level by a tick, right? So that's pretty much describing all of this run up here. Again, we use a 4-hour chart to go internal range, external range for the day. Had a news catalyst to kind of propel price higher after hitting that 4-hour breaker, and after it reaches objective, pull back into the range, back inside of the range, the previous day's range. And I'm not counting Sunday, but previous day's range in this case would be Friday high to low. So here you go here. So we kind of described everything on the 1 hour time frame. This here, run on stops. Gotta break a market structure here, pull back into this imbalance or this breaker here, and the same situation continues. I took that on the 5-minute time frame. Took it, was it the 5-minute or the 15? Yeah, entered. Let me see. Did you have the weekly open here? Okay, here we go. On the 5-minute. I entered right here. And I entered here by doing this here, which is like, so it's actually an optimal trade entry, but it's not. It's a hidden OTE entry into right here, and I had 2 reasons to enter here, and one of them was this violated bearish fair value gap. That's one reason, and in a hidden OTE entry, and I was aiming for. At that time, there was a 4-hour. There was a 4-hour imbalance that I was using from the previous week. Previous 2 weeks, I think it was here. This one here. Let me just take that. Let's delete that. Let's take that. You can look at the other videos if you wish and see why I use this level here. Because again, it's here. It's been used here. It's been used here, here. Bust through here. You can see didn't quite get back up there again, but it did today, right? So that's what the target was actually, because I had all of these levels from the previous 2 weeks still on the chart. So yeah, I entered here. I wanted it to go above these highs here, but I think I exited somewhere around this consolidation because I'm not up during these hours. I could have let it run because you have to accept the risk, right? Like put a stop somewhere with acceptable stop. But this would have been sweet, right? Like wake up in the morning, whatever time you get up, and still see price cooking in your favor. It's good money. So took that trade. That was good money. This was obviously a continuation into that level. You can see it more clearer here. What else is there? These levels was actually from this time frame too, and I took this short here. Took this short, and I exited on this candle here. I watched it pull back into here, and which is now violated fair value gap, which is inverted fair value gap, and this is all like the new day opening here, 1800 hours. All right, so we got the long, we got the draw on liquidity. We have the potential draw on liquidity was this level here. Had a lot of different, you could either use this. This is actually the reason, one of the reasons why I accepted the trade here was because we were at this higher time frame key level, and I was looking forward to be retested or violated. And what I saw initially was this black lines here. This is I saw this violated, traded below. You can say that's an order block, but this is a bearish order block here. Anyway, I seen this gap here, and I use my optimal trade entry, and I entered here short. I didn't use, I actually used that, and I also used time and price. So I liked the market maker sell model that takes place during this hour. You can call it the silver bullet. And I like the 1530 to 1545, and they look at 1545 to 1600 or 1615 as like a continuation. So you can see here, see like so this was 1540, 1545. You have a continuation taking out these lows into this imbalance here. You can see that here, and you can see the retracement into 1555, which is 355 EST, 1600 back into this inverted fair value gap. Then you have a continuation pattern at 1600 to 1620. Didn't take that out. Have a push. We have a I'm sorry. We have a pullback here into this bearish order, fair value gap. And this was a test, right? Right. You can include the volume imbalance, or you cannot. It's up to you. Ideally, the system is to include that as well. But anyway, you can see it here. being respected for the most part. Boom, the consequent encroachment of that, and taking out the PM session low. All right, so that was a nice drop, and optimal trade entry. Let's just use 60.89 as an entry, and an exit at 60.73 or 60.70, whatever you want, 60.74. It's pretty good, right? It's pretty good. And where are we? So yeah, I'm not sure if I sounded more like a jockey, or like I don't know what you call it. Not sure if I like speedball through it. Oh, this was a potential. I was looking here as I highlighted this as a potential order block that potentially, and you can see price hit it, pull back above that. This is actually that buy side liquidity, that previous high. So it hit it, and then it stayed below it. 60.8525. The high here is 60.8525. So that's your retest, so to speak. And plus we have this volume imbalance as well. It broke through that with force, busted this with force, and at that point it was overextended. So you have a pullback into this violated fair value gap, this inverted fair value gap, and continuation short. So that was like 2 trades. I did want to highlight that it's not that clear on this time frame, but it is on the 15-minute. It's market maker buy model above this consolidation, or this consolidation. Right, so you have a buy model here, and you can see it here above this level, above that level, consolidate it, and then pull back inside the range. It's 27 minutes now, and so yeah, that's literally the two trades. There's multiple trades here. Again, I highlighted this one, and you could have gotten down here as like a turtle soup entry, pull back. Could have gotten in here too as utilizing this range, but I didn't get involved until after the market opened the next day. Sunday night. All right. So those are the two. So that's one trade. One trade. Well, you have one here, like I'm saying. That low to this high, pull back here, entry. And again, you had this smaller entry here, this consolidation. You have price, broke above here, consolidated here, took off. So yeah, it had a couple of different trades. The news candle probably would have shook you out. Probably would have been very confusing since it ran up here, ran down, and then, so same way like the news, like we want to trade the news like a news catalyst, which is great, but if you're not going to be able to handle like the manipulation, the whipsaw effect, then you can literally just not do it. Don't take the trade if you don't have edge or not able to identify your edge, and then wait until the smoke clears, and you can risk appropriately during quieter times. And so yeah, I took this short here. I think I went through that already. This was a nice short. So yeah, thank you for listening. Please like, comment, like, comment, subscribe below. Talk to me. I didn't get into the mantra, but here we go. Day by day and in every way, I'm getting better and better. That's day by day and in every way, I'm getting better and better.